Hey traders and investors, it's Serge Berger here. Today we're going to talk about is the topic of relative strength and relative weakness, and we're going to take a look at the chart of Goldman Sachs specifically because it does show us some pretty significant relative weakness as of late, and certainly through most of the first quarter of 2014 that has just passed. So if you want to talk about relative strength, look at the BKX. This is basically the banking index. We can also look at the XLF, which is more of a sector view on the S&P 500 of financial stocks. But you can see the BKX is actually showing some pretty good movement here. It is holding all its support lines. It's basing above this breakout area where it broke past in mid March. So this all looks pretty good. So in the kind of market we have at the moment, where we are still in a cyclical bull market, arguably, but probably coming to the latter end of that, you don't want to start trying to buy relative weakness. Because A, it's quite tough on the mind to sustain those kind of trades and buy into a hole, and B, also just from a P&L perspective, buying relative strength has a higher probability than buying relative weakness certainly at the crossroads you are at the moment. So speaking of relative strength and relative weakness, as I said, we're going to take a look at the chart of Goldman Sachs. Keeping in mind the chart we just looked at of the BKX, and we can look at other financial indices and things like that. But this one does show pretty clearly that basically the stock topped here in January, and ever since all it's done is trend lower. It hasn't trended down in a straight line. It's had a bounce, but basically the trend has been down, and it's just kind of holding on to the support line that dates back to June of last year. So if Goldman Sachs were to drop, say, below $160, $159, it's probably going to come into more meaningful selling pressure. However, my point here isn't to short Goldman Sachs, but rather to avoid it for the time being, because I don't think it's showing any relative strength. In fact, it certainly is showing relative weakness. If you want to talk about relative strength, you can look at things like Bank of America, still holding on to these trend lines very nicely. You can look at something like a Wells Fargo. You can even look at some of the actual broker names, more like a retail broker kind of thing, like Schwab, SCHW is a ticker there, and you can see these stocks are pretty much pulling along right with some of those indices we just looked at before, the BKX and the XLF, and you can look at some other ones as well. But Goldman Sachs, really is showing a lot of topping action there in January, and just doesn't seem to be able to get out of its own way for the time being. So buy relative strength. Don't bother trying to buy, into relative weakness in the type of market we have right now, which for me means avoiding Goldman Sachs here on the long side, at least for the time being. I hope this makes sense. As always, if you got any questions, you can hit me up on my Twitter handle, which is SteadyTrader. Take care.